Welcome to another one of our Pacific Financial Planner video casts. Today's April Fool's Day. I've got nothing to fool you on other than to tell you the market continues to go up. We do have a bullish bias on the market. The Dow is struggling with 11,000. It's the start of the second quarter. It's going to be very interesting to see how the second quarter can hold up. The year-over-year comparisons for earnings, which will be starting to come out shortly, should be fairly easy. They should be fairly easy comparisons. How much of that is factored into today's market remains the question. That's really the million-dollar question. I think that we're going to want to see not only earnings growth, but earnings growth through revenue growth. And I think that most companies should be able to show some of that. And again, how much of that is already factored in? Can we be disappointed on the downside, or can we be disappointed to the upside, I guess causing a market rally? That remains to be seen. Volume is less than tepid. There is no volume trading on the markets. Particularly this week was a holiday shortened week. Traders, many of them on vacation as the spring break for most schools, kept volume light, but volume has been light all year. There is a number of problems, a plethora of problems out there that could tip the market over and I think cause a domino effect across global markets. One of the biggest problems we have is sovereign debt issues. While Greece might have gotten their bailout, Ireland got downgraded last week, and again, the UK, United States, still has many financial issues. But it depends on how we look at it. Is the glass half full or half empty? I think it's important to continue to play the bullish upside of the market, but remember the 3 Ps. You want to have a plan for participation and protection. Don't forget the protection part. That's very important. The markets go down much quicker than they go up. We see a triangle pattern, actually a rising wedge pattern as the market's traded in a narrow range as it claws its way higher. We could break to the upside, negating that pattern, just as we did the double top several weeks ago. You know, these are patterns that have tendencies to repeat, but that doesn't guarantee anything. That rising wedge pattern is a bearish pattern. If we were to break down, the market could go down fairly quickly. It's important to understand that there's times to make money and there's times to protect the money. It's important to have a plan for protection in today's environment. If you've got any further questions or want a free portfolio review, call our office toll-free 800-449-9501. Also go to our website, www.yourmoneytalks.com. Sign up for our free no obligation newsletter. Again, be glad to review your portfolio and help you have a plan for protection going forward. Stay tuned for another edition of our Pacific Financial Planners video cast coming up soon.